Okay, so characteristics of financial information. So there's several qualitative characteristics that guide the preparation of general purpose financial statements, like our profit or loss, financial position, and cash flows statements. So these are the attributes of financial information that are most valuable to decision-making individuals who depend on the business's financial statements to make those decisions. So we've got relevance, including materiality, which is what we just saw then, reliability, comparability, and understandability. So let's go through each of these in turn. So to start with, relevance. So financial information that can make a difference to the user's decisions is relevant. So the influence may be in a capacity that's confirming something or helping to predict something. So it may corroborate pre-existing information to confirm that it's correct, or it could assist the business to predict or someone else to predict the future outcomes that can inform future decision making. So decision making in terms of what will happen to the business, what investors would do, those sorts of things. And part of this is materiality. So this revolves around certain information's significance to a specific business. So it's intertwined with this idea of relevance. If information being excluded or misreported could affect the financial decisions of users who base their choices off these reports, then that information is deemed to be material. So if it's significant to those people who use the information, then it's material. So what is or is not considered to be material is going to differ between each business because it's a relative concept. It's not just standard for every business. Immaterial information could be left out from published reports, but it can't be left out at the expense of the accuracy of your accounting entries. So a real world example of this idea of omitting information is the idea that we round to the nearest dollar and remove cent values in some reports. So reliability, this is about, it's important that information is impartial, so it can't be full of errors, it can't be misleading in any way, because it's most useful when it is complete, so there's nothing missing, it's neutral, so no sort of biases have influenced the way it's presented or what's included, and it's as accurate as possible as well. So in terms of comparability, information that is comparable is presented in a way that enables comparison between the business's current financial reports and previous financial reports. And it also involves external comparison. So internal comparison is when you're able to compare that same business over multiple years with different periods. And then external comparison is going to involve assessing the business's financial information against other businesses or industry averages or benchmarks. So consistency in the way information is measured and displayed is really key to comparability, because if it's inconsistent, then you can't compare it. So in science, back maybe in your junior years of science at high school, you probably did different experiments where you were only allowed to change one variable and things like that. So we understand that idea that you need consistency in order to compare things, because if you in those cases in science, if you changed a bunch of different variables, then you wouldn't know which variable had an impact. If the result changed, then you wouldn't know what actually caused that change. So consistency is key to being able to compare. Understandability is pretty straightforward. So information needs to be displayed in the most understandable way possible. In saying that, it's not able to compromise relevance or reliability. Those are sort of the priorities, and then understandability is next. So in order to achieve this idea of understandability, you want to classify and present information clearly and concisely, and then also avoid oversimplification and inaccuracy. So yes, you want it to be straightforward, but you can't oversimplify things because that would misrepresent the information and jeopardize that reliability as well. So the classifications that we looked at earlier are part of this idea of understandability. It's separating things out to make it easier to read and understand. Just like the way that we have headings in reports that we write, in these slides we've got headings. It's all about making it easier to digest and follow.